Okay, let's assume that your machinery cost is 100,000, whereas your beginning of the year machinery depreciation is 10,000, and the business policy at the end of the year is to use reducing balance method of depreciation at 10%. Now let's move to the calculation. Cost 100,000, opening depreciation 10,000, reducing balance method at 10%. Now you should know the formula to calculate depreciation using reducing balance method. Cost, take away your opening depreciation. By doing this, you can find your net book value, and then you apply the percentage, which is 10 over 100. Your cost of machinery is 100,000 and your opening depreciation is worth 10,000. Therefore, your net book value, the difference between 100,000 and 10,000, gives you 90,000. And then calculate 10 over 100. Cancel the zeros. Therefore, the answer that you get would be 9,000 for 31st/12/2000. Now, how are we going to post these entries to the ledger? Now, this is a T account. You are preparing for machinery provision for depreciation. And then you're preparing it for the year 2000. First, you enter the opening depreciation. And why you're entering it on the credit side? Provisions usually have a credit balance. So whenever you enter an opening balance, you write it as balance brought down, and the value is 10,000. And for the current year, you calculated depreciation, which goes to income statement under the category of expense. That's 9,000. Now we're going to balance the ledger. Right. Now let's find out which side is greater. This is your debit side, this is your credit side. Credit side is greater, 19,000. 19,000 take away 0 gives you 19,000. 31st/12/2000 as balance carried down. 1st of Jan 2001 as balance brought down, 19,000. Now, there are two types of financial statements. There are two types of financial statements. There are two types of financial statements. One is called the income statement. The purpose of preparing an income statement is to find the profit or the loss. And another one is statement of financial position, which is prepared to find the financial stability of the business. Now, in an income statement, we have a category called expense. Now, under this category, we have to post this amount. So, this 9,000 should go over here as machinery depreciation. So, we calculated 9,000 for the current year. And the second financial statement is statement of financial position. This goes under the category of non-current asset. So you write the type of non-current asset, you include the cost. Now the cost is identified in the question as 10,000. Now you have to find the closing value of depreciation. It's 19,000. This is called the accumulated depreciation. Accumulated depreciation means total depreciation, which is 19,000. So you deduct this in order to find your net book value. So from 10,000, 100,000. This should be 100,000. Okay, now 100,000 take away 19,000. So you get 81,000 as your net book value. Okay, now we have understood the question. We had calculated depreciation using reducing balance method. We posted the opening balance. Then we posted the current year's depreciation, balanced it, found the carried down, brought down value, transferred to the financial statements such as income statement and statement of financial position.